Good afternoon, I'm MJ Nodilo, co-founder of Pathlight Investors, here with your monthly video spotlight. Today I'd like to talk about the most beloved company and stock in the world, Apple Computer. Now I certainly wouldn't want to dare stand up here and say something bad about the company and feel the wrath of the fervent and loyal fan base. But I do think it's important for people to recognize that there are risks inherent with any investment, even Apple. First and foremost, let's talk about the remarkable turnaround Apple has had. In 1997, Apple required a $150 million investment from Microsoft to just stay afloat. Not long ago, in 2000, they had seen their market share of personal computers slip to under 3% from 15% just a few years earlier. So things weren't looking very good. But then came the iPod, then the iPhone, and then the iPad, and the rest is history. Since they introduced the iPod in 2001, Apple has seen revenues grow from $5 billion to more than $120 billion. And so, although there's still room for growth in market share, valuation is still reasonable, and they continue to execute on rolling out new and innovative products, I think it's important to highlight some of the risks that Apple has from an investment standpoint. The major risk I see is what I call the law of large numbers. And that's both on the top line sales side as well as the market valuation. So let's look at sales. Currently, Apple will require 30 to 40 billion in new sales to maintain its 20% annual growth rate. That 20% annual growth is low by some people's estimates. But when you think about it, 3 years ago in 2009, Apple didn't even do 40 billion in sales. So to expect 40 billion in new sales every year into perpetuity may be asking a lot. Then let's look at the market valuation. Today at Apple's current price of $614 a share, the market values Apple at $565 billion. Let's put a 20% growth rate on its stock price for the next 5 years, which, believe me, is low by many investors' expectations. And 5 years from now, you've got a company that is worth $1.4 trillion. That's right, $1.4 trillion if you get 20% growth for the next 5 years. At that valuation, Apple would be worth more than Microsoft, Walmart, Johnson & Johnson, Intel, Coca-Cola, and ExxonMobil combined. Now, I'm not saying they can't do it, but that's sure asking a lot of a company in terms of future growth. Now, before I get called an Apple hater, for full disclosure, I've got an iPad at home. I love their products. I'm enamored with their operational excellence. But I just wanted to interject some common sense into the discussion about Apple being a great investment at these current levels. There are risks inherent to any investment. You've got to ask yourself what could go wrong, especially when the fervor is so passionate and the downside risk is often not considered. Thanks for tuning in.